This is a Crypto Legends podcast.
Hi everybody, welcome to the next episode of Crypto Legends. Today I have the privilege to host Jeff Hancock, co-founder and CEO at Coinpass. Jeff is originally from Australia, spent 16 years in technology, looking after hotels, casinos, and data centers in that order. He most recently helped SoftBank design technical infrastructure for large retail, fintech, and investment companies in the UK. And Coinpass itself, they have a vision to sort of blur the line between crypto and banking into a single digital layer. And build a safe, compliant, and regulated way for investors and businesses to access the digital asset space. Welcome, Jeff. It's really great to have you on the show.
Thank you, Adam. Thanks for having me on. It's really great to be here. I've been following your content for a little bit and know a little bit about Fiat Republic. So now looking forward to sharing and enlightening some of the stories of our journey over the last couple of years.
Awesome. So why don't we start with like how you really got into crypto? Because that's what we like to start with in this show. Like what were the original stories or what was the sort of genesis of your interest in crypto?
Yeah, well, it goes back from one of my earlier tech jobs when I was looking after data centers, and we had back in 2013 it must have been. I'd never touched a stock, never touched a share, never invested before. And we had a very bullish CEO that would say yes to everything and figure the rest out later. So that's how I got such a wide repertoire of different tech from, everything from VMware, virtualization, switches, VoIP telephony. And then one day a financial services come along, said our data has been locked. The hacker is demanding Bitcoin. Can you help us? And of course, the answer was yes. So I had to learn Bitcoin over a very short amount of time. I think it was about 2 days, maybe. Set up a wallet and kind of get it done. The exchange rate moved kind of massively between us acquiring the Bitcoin and paying off the ransomware. We turned off the virtual machine and kind of forgot about it for a few years until I really got properly started in crypto. It was probably about 2016, 2017. I had acquired a bit of Bitcoin. I very quickly figured out, the wallet infrastructure, all the technical aspects of it, because that was, very in line with what I was doing with cybersecurity infrastructure. Fast forward a year or two, Bitcoin started gaining more traction, and I was at SoftBank at the time, and I thought back to myself, I wonder if I can find that wallet or if I still have access to it. I could find the wallet. Unfortunately, I couldn't access it, and I think the damage was somewhere in like the 70 Bitcoin mark. So that was kind of my first ever real kind of my first kind of real access into crypto, and not paying attention, I suppose, was one of those in hindsight kind of stories that everyone has, and that's kind of how it started. Did a few ICOs. I think I was holding close to 200 something tokens in the middle of the ICO mania, going up the lift. In SoftBank in Mayfair, your portfolio would do 2-3% on a lift ride, which was crazy times. And while I was at the business consulting for them, I had a few groups and public speaking engagements where I used to educate people on crypto. Before finally someone asking me, how do I take a large position in crypto in the UK without any FX exposure? And this was kind of early 2017. And there wasn't really any decent on-ramps right then. You were sending crypto to Latvia or Lithuania or into Europe, or just taking the FX exposure and getting slipped a few percent on your entries. And then I opened my big mouth and thought, why don't I build my own? I brought a few founders together. We sat around. I've actually still got the original picture from the bar that night, where we kind of drew up the a one 3-line paragraph of the business plan, a drawing of the infrastructure,
on a napkin or not?
Yeah, on I think it's like A5 bit of paper with a wine stain in the corner. Yeah, something like that. Founded the company the next day and was on the SoftBank compliance list a week later for starting a business without permission. So it was very bootstrap, very entrepreneurial, and the goal was just to sell one Bitcoin to one person. And by the time we launched in September, we did that on our second day. So what next?
Right. And you've been on quite a journey with Coinpass. Like, how has it been going over the last couple of years? I mean, ever since you founded Coinpass with your co-founders, and now, like, what do you see like as the kind of main uh, dynamics that have shifted in that time frame?
Well, it's definitely been market driven. The UK market's not the smallest market in the world. It's definitely not the biggest either. But I do feel London being one of those financial centers in the world, it is one of the most robust. There's a lot of educated users, which a lot of them kind of gravitate towards us. Because we're a UK business, because we have that UK FCA license, because all of our banking is done here in the UK, we can do a lot more throughput without any limits, as opposed to other exchanges that might have a 5 or a 10K limit, and that's all you can do for the entire month. We just have a slightly different compliance process that allows those users to do much higher throughput. This is very attractive to a lot of businesses, whether they're property investors, consultants, even up to a few law firms that we look after now. Started with 5 assets. I think we're up to about nearly 20 now, including stablecoins. And I believe we're one of the only crypto platforms in the UK that offer stablecoin deposits and withdrawals for fiat.
Okay, that's really cool. And so you started off as an on-ramp and off-ramp, I guess, right? And evolved into that sort of exchange, listing tokens directly. Originally, I guess the vision was to bring this sort of targeted investor persona, right? And make it easier for them. How does moving from on-ramp, off-ramp to an exchange change that that vision, or has it at all?
Definitely hurts your revenue. I'll tell you that much. But no, it kind of came out of client demand. We were never really going to build an exchange, but we had the same clients coming back to us, every single month or every single week. Some of them even daily. When we built our little dollar cost averaging tool, Auto Trade, which would simply just you deposit it, it trades Bitcoin as soon as it hits your account. And when when a few thousand people ask you when are you going to have a full execution trading exchange, you hear that a few thousand times, and you have to finally do what the people want. So we kind of built the second platform, which was Coinpass Trade. Got a very good response to that from the user base. They liked that it was simple, it wasn't overdone, it had all the right information in front of you, didn't have heaps of crazy flashing lights in your face, and it simply kind of just worked for them. A lot of people migrated over to the advanced tool. We kind of followed a Coinbase-esque kind of strategy, having a simple tool for regular retail want to buy a couple of £100 to the more advanced that wanted a full charting and limiters and everything. Yep. But then they kind of wanted the best of both worlds. I miss my simple dashboards and I miss the specific tool. And then the people that kind of start off small want to educate and kind of lift their investing game up. So they want to move over to trade. So the latest iteration of the platform this year kind of blends both of those layers back together.
Awesome. And when you think of sort of, so you said that obviously when you moved from on-ramp to crypto exchange, some of that profitability sort of took a dip, but you were cash positive in like 4 months ever since incorporation. Is that correct? How did you do this?
Mostly just through organic growth. Really listening to our community. Keeping track of the market and kind of what were the main sticking points. And all of that time was not just the entry into the market, it was also the exit, and because our main client base are depositing between 2,000 and maybe 10,000 pounds, we take care of kind of any size investor. There's no, I think the minimum is like 10 quid, 10 pounds is about the minimum trade size. But having that kind of security of that when I do take my gains or do take my profit, how do I get them back into my bank account? And because of the way that we do our compliance, the way that we work with our banking providers and partners, all of them are one-to-one relationships. We don't just ship it off to a third-party payment provider. And if they have a problem with the provider, it's their problem. No, we bring all of our user problems to us, and we deal them in a very efficient, very fast manner. And I think that building a trust, which is one of the main pillars of crypto and blockchain, we're able to kind of keep that trust with our users, which kind of keep them coming back.
And the initial group of customers were like friends and family, or was it like immediately sort of out there commercially with like a proper commercial launch, and you actually got the first batch of customers from the market?
A little bit of both. So there was definitely some family and friends. Definitely leaned on my LinkedIn network and my social network quite a lot. But I was, as I mentioned a little bit at the beginning, when I was at SoftBank, I used to do a lot of content online for various Facebook groups, certain trading, education firms and stuff like that. And that kind of gave us a bit of a platform to really gauge what the people that are actively trading in this market, wanting to getting access, to crypto, ICOs, DeFi in its infancy, etc. What they were looking for the most, and the biggest problem they had was my bank hates crypto. It was like, okay, how do we build a platform that banks don't hate? How do we work, effectively with them so someone can deposit £10,000 of their hard-earned into Bitcoin, into ETH, and then do exactly what they want to do, that financial freedom and that that sovereignty of wealth. So a lot of the frameworking, a lot of the structuring, we kind of pretended like we were a regulated firm back in 2018. The way that we did our compliance, it wasn't really heavy on the user side, but it was a much more professional approach than what was around in those early days. And that could be a double-edged blade for certain people. But for someone that wants to put in serious capital into the market, and also wants that trust that they're going to be able to get out of the market without their account getting black flagged, we've definitely kind of succeeded in that. So there was a bit of a soft launch to kind of friends and family, slightly larger launch to the platform of networks I had access to, and then by then people were referring other people, and then it was out in the wild before we knew it.
Sounds awesome. That's really well done. Congratulations on that. Like, let's say the early traction, early progress, because that must have had its own benefits for the growth, for the continuous growth over the longer time frame.
Yeah, and the cool bit is some of those users from 2018 are kind of still around. I see some of the aggregate data of like user lifetime and customer value and that kind of stuff that comes out of our marketing data. But if we go through some of the raw data, we can go back from sign up date to last login, and some of those they're 14, 15, 1600 days. Well, that's 4 years. Oh, wow, they're still coming back. That's awesome. So every now and then no, it does. And some of them I know, some of them I don't. I can kind of trace their roots and origins back to a particular event or something like that. But it's I try and play a little bit of that back and do some personal outreach every now and then to some of those accounts that have been with us from the start. We love giving away merch. We love doing competitions, but just getting an email from someone every now and then to say, yeah, thanks for the support is a really cool thing to be able to do, and I love doing that.
That sounds awesome. So we kind of are moving towards the present and like what is happening in the space right now. You mentioned your unique approach to compliance. You mentioned banks don't like in crypto. I mean, we're Fiat Republic here. We're on a mission to change that. I think we're very well aligned when it comes to that, sort of at least the problem statement. But you have deliberately become FCA regulated, right? And you really are, serious about this. Why did you pursue that license? Given the let's because it's not just the banks, it's the regulator as well that they're not necessarily convinced. They're not disapproving of crypto, but they're not making it easy, right? So how come did you go for this regulatory status, and what does it give you? How does it benefit your business model?
Yeah, for sure. So it was a decision we took very early on. If you take a look at anything on a blockchain level, whether it's a semi-centralized chain or not, or something as widespread as Bitcoin, you can't regulate a blockchain. You just can't. And it was going to be one of those kind of like miners in gold rush kind of thing. If you have a platform that connects the legacy world to the new Web3 world, DLT world, whatever you want to call it, those platforms are going to be the first targets to be regulated. It's just a progression of financial services and progression of any market that's ever kind of come around. So if we could be one of the early ones and think long term, that will have value long term for the brand, for any shareholders, and obviously for our clients. We see companies pop up every day now that have got a very cheap and easy to attain license from somewhere in Europe or from maybe Seychelles, or it doesn't matter where. But those easy to attain licenses, hundreds of the thousands of those platforms have kind of come and gone in just a very, very short amount of time. So we're always aiming for longevity. We knew the UK is one of those financial hubs in the world. and we wanted to kind of be a part of that, no matter what our size.
Yeah, and on this sort of dynamic or the sentiment towards crypto, how do you feel you play a role to sort of change that over time, hopefully for the better, and because at least where we stand and where we work with banks and crypto platforms, we sit in between, we see a lot of fear on the side of the sort of TradFi, regulatory community and the banking community. How do you at Coinpass address that?
I think it's definitely just as simple as education. There's just a lack of education on, what it is that people are trying to do, what's broken in the existing financial system, and why people are kind of flocking to crypto. Some people, let's not be crazy about it. Some people are trying to get rich quick, and there are those gems in the rough that some people have gotten very, very lucky on. But that's not that appears in any market. Whether it's property or forex or gold, it doesn't matter. There's always something there. But I think it's definitely a lack of understanding or a lack of education on how these systems work, on some of the benefits they add, and truly on, this is like an internet replacing moment. And some regulators have kind of taken that by the neck and, really run with it and created some really great frameworks for countries to grow. And the FCA has just been a little bit slow to act. It was originally, here's a box, and we already regulate stuff, let's try and put crypto in the box. And that hasn't necessarily worked. I mean, the original vernacular was Bitcoin and crypto and everything else is exactly the same. And that was kind of 2017. And then it was like exchange tokens, utility, and security tokens. Okay, cool, we're developing a bit. And now it's kind of like a wide spread of activities, including stablecoins, which is a really, really good sign. They are improving. The main problem still at the moment is that we've got some large government agencies that don't have all the same, I suppose, vision or goals or even narrative. The HMRC, really bullish approach on not trying to punish people with crypto gains. If you have fair reporting, you can use your capital gains, blah 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 blah. Amazing. The NCA are just trying to protect people from getting scammed. They're not an agency to kind of be feared of. And the Treasury worked with Parliament. I was at an event 3 nights ago. My days are blurring together a lot at the moment, sorry. They kind of can't ignore DLT and crypto anymore, whether it's from an investing perspective, a trading perspective, a settlement layer, movement of capital via stablecoins. There's too much, it's kind of like a floodgate. There is too much pressure now building where the UK as an economy will be left behind for not encouraging the use of fair and safe trading venues or fair and safe use of the technology. And I think the bear market we're in now is different to any bear market we've ever seen. There's a war on, there's rampant inflation. Liz Truss is out of office now. There's so much going on, but it's completely different to the last bear market. It's completely different to when COVID was happening. So I believe during the next positive market move, when, let's face it, world economics kind of figures itself out a little bit, we will see, a massive bull run, and everyone that's kind of positioned themselves now in a strong position from a regulatory perspective, custody and storage, banking connections, infrastructure, which is what fintech is essentially built on. Those companies will be around for a long time to come. And I think the UK market will be an exceptionally strong one for it when we can get a few of those kind of layers aligned from a regulatory point of view.
Here, I would say very positive outlook. I would agree with especially the infrastructure, the plumbers.
Yeah, it comes down to plumbing. We're building literally the infrastructure for the next financial industry, and I think when you start expanding your memory, it's very easy. I mean, you're probably the same as this. It's very easy to get focused in on product and what we're building and competitiveness and USPs and that kind of stuff. But if you zoom out for a second, you can build anything on Ethereum, and there's amazing custody infrastructure. So they start tokenizing stuff. Guess what? All the facilities are already there. They're all ready to go. All the trading venues, all the banking connections, custody, DeFi's, all of that stuff is there. So when they finally do come and join the fold, like JP Morgan and like MasterCard and like Visa, all these big names, they're not fighting with us anymore. They're kind of coming to join the party now that they know that this technology has legs.
Yeah, I like that. I like that vision a lot. So just on UK in particular, obviously we're we have that in common. We're both our companies are based in the UK. And UK obviously post Brexit, looking back at the European Union, right? What is going on there with MICA coming around the corner? How do you see UK's role evolving going forward? After Brexit, especially having divorced from the European community in terms of like the common financial services standard. Do you see that being copied over long period of time, right, from the European Union, or maybe the European Union copying the UK frameworks? Or how do you see that evolving, and how is UK going to sort of develop going forward?
I think they have to develop. I mean, the EU is going to be, it's a bigger, badder framework. Not badder, better as in badass maybe. I don't think the EU is going to take any sort of lead from the UK, just on principle, in my personal opinion. And the FCA's frameworks are not strong enough or robust enough or dynamic enough to let a lot of different businesses evolve. Something are not dissimilar to, like, let's say Australia, where if you're an exchange or a custodian or a wallet provider or purely just an infrastructure provider, there are rules and regs for everybody, that fit different kind of business models. And I think until we get to that kind of level where the whole, if you touch anything with crypto, you put crypto in your footer, you have to be registered. And you might not touch crypto assets at all. So we need to kind of get away from the one size fits all kind of shoe and have something much more dynamic that not only allows innovation, but allows a startup to come with an idea and be competitive. As one of the main remarks that came out of the House of Commons event a couple of nights ago was they have to make the UK a competitive place. Saw a counter article that 23% of financial services don't want the UK to become a crypto hub. Maybe you rebrand it a bit. Maybe you call it a DLT hub or something like that, or a blockchain hub. Use a different word than crypto, because crypto doesn't have the greatest image among financial services. But saying that, they all trade it. They've all got access to it. They all want derivative products. They all want ETFs. So I think everyone wants the same thing. We just have to come up with that much more educated variation of wording or vernacular or vision or whatever it is. We just need to be able to find a common ground with the existing dusty old system so everybody can win. And I think that's where your business and ours align a lot, is that we only win when our customers win. So it's a very easy business model to keep scaling. If you keep creating wins, everyone can have a great outcome. And I think that's what they're trying to aim for. It's just a very, how do you eat an elephant? One bite at a time. They haven't chosen the elephant they want to eat yet. So it's a very, very big thing, and I don't envy anyone in their position trying to put their best foot forward.
So you've taken quite a unique approach, but very interesting one, to serving businesses. Many people go for institutions and fight over them, but you have developed a model to kind of focusing on LTD companies, right? 20% of your customer base are LTDs. What made you kind of pick that as a strategy, as a tactic, and how are you serving this market?
Really good question, Adam. How we basically came about was just a question from our community. They had funds in their limited company they wanted to invest with. They wanted the dollar cost average. I believe it's one of my property investor contacts. I still have a property business off to the side that I still run, and they wanted to get some longer term investment, which property investors do, and we saw it as a bit of an underserved market. Doing some more research, we found that even CFD or Forex platforms don't allow limited company accounts, or if they do, they're exceptionally hard to onboard. So we kind of borrowed a framework that our COO had from his previous financial services company, which is all limited companies and institutions only, doing asset management, bonds, equities, you name it, and basically kind of tested that framework out and see if we could make something work. The one thing we couldn't do, obviously, was we can't take a deposit from a limited company into a retail customer's name. It's like AML crossflow. We can't do that. So we onboarded a group of 10 companies to begin with, and they're some of our stickiest users. They have capital sitting in their limited accounts that they are either saving for a rainy day or investing in more properties, or the only way to really access that capital to do something with is they have to take it as a dividend, take it as income, pay any kind of number of different tax brackets on it in order to invest with it in their own name. So we kind of wanted to cut out a proverbial middleman, which is all about crypto, right? And enable limited companies to buy and sell and trade crypto. This is very well received from the user base. We have a couple of clients that have like 4 or 5 accounts with us. The only one bit that has to be unique is the email address, because we still require an email based login. So they have 3 email addresses. They've got 3 limited companies, and they're some of our top users. We've even expanded this recently this year, when we had a couple of SaaS pension administrators come to us saying our SaaS pension trustees want to invest into crypto using their SaaS pension vehicle, which again is just another bit of a framework change from our existing limited company structure. So we're working with 3 SaaS pension trustees now that are putting crypto into their long-term SaaS pension, which is pretty cool.
That's pretty cool. And so if it's 20% of the business accounts are LTDs, like what is, how does the rest of your customer base, break down?
Yeah, so 80-20 retail, about 90% UK, 10% Europe, kind of rest of the world. We support about 36 countries. We're not able to market and solicit into those countries due to licensing, but social media research, PR, all that kind of stuff nets us a lot of euro-based trading as well. In terms of the 80% that are retail, they're still quite, what's the word? We don't get that many £100 deposit users, if that makes sense. We can still service them just fine, because it's the same bank account, it's the same API stack, same onboarding process. But our typical clientele are investing that kind of 2, 5,000, 10,000 kind of range, and trading it over and over, or they're looking to get yield from some sort of DeFi product. So we are looking to do some staking and DeFi products in the next kind of quarter. But they tend to be 30 to, originally it was going to be 30 to 40 was going to be our target market, but now the range of that is like 30-year-old to 50, 55 maybe. We've got a couple of ex-retirees, a couple of ex-bankers, some psychiatrists. We've got a bricklayer who buys 35 quid of Bitcoin a day. Guy's awesome. Buys more than me. His dollar cost averaging must be ridiculously low. He's been doing it for like 3 years. So, shout out to Alan. We hear these really interesting stories all the time of clients coming on board that they want to get involved. Some clients, they understand. Actually, I'll quote this from one of the emails I got. I understand more about Bitcoin than I do about pound sterling. And this is just kind of, not even a generational gap now. Some of the existing monetary system is so complex to understand, with inflation where we have it right now as well. They could pick up, maybe not the Bitcoin white paper, but they can educate themselves on it's a fixed amount. It's in a wallet. I can move it. I'm happy to pay the network fee. I don't know what my bank does with my money. All of these kind of things, the people that are doing it genuinely, not trying to money launder and all the other kind of crap, they want to take, control of their own financial situation. And when their banks kind of punish them for wanting to buy, 2-3K worth of crypto, it kind of just reinforces that fact even more.
Yeah, no, that's so true. I started trading in 2017 during the second Bitcoin bull run. I remember trying to put in 10K into Coinbase through my HSBC account. Had to wait 3 weeks, sign a couple of waivers of responsibility for my money with my blood.
Well, it's not your money until it leaves the account. It's their money with an IOU. So
and missed on the bull run as well because of that. Because I was waiting for the 10K to just land somewhere and see it on the other side. It's just incredible.
Yeah, and that's probably one of the key ones we wanted to solve was you see a drop. You have either a good feeling or you've been doing this for 3-4 years. You see a 2% drop, like, no, that's a 10% drop. I need to get my 10K in there now. So we wanted to kind of alleviate all of those kind of pressures that even if, you want to do 10K and we have to do some extra compliance on our side for source of funds, etc., we'll still get the funds into the account so you can trade it. And then we'll sort out if you want to remove it to another wallet later, not to handcuff people, but allow people to get their price as fast as possible. That because we've heard that, problem over and over and over again. People want to put in a sizable chunk of capital and you kind of get punished for it.
Yeah. Well, it sounds like I should open an account with Coinpass.
Oh, yeah, you go. Damn.
You've acquired a customer. So just kind of moving slowly but steadily towards the future, and kind of talking about the vision for CeFi, DeFi. The divide between the two is quite strong still, right? There's like in a lot of our pitch material at Fear Republic, we have the Golden Gate, and you have CeFi or banks on one side, and the other one is crypto and DeFi, and there's a fog, just not allowing for any communication or any interaction to happen. Do you feel that this is still the case? And is it good that there's so much separation going on between those two spaces?
That's a really big one. I think you have a separate podcast just on that alone. So I think there is a bit of a fugazi, and I think it really depends on the platform you're trading with, and I think that's a very, very big point. If we take it from a very 30,000 foot view, stuff like Celsius and those kind of platforms running a very dangerous game, in terms of guaranteeing a return to users, and then either lending it at the back end or algo trading it. That's what I would call CeFi. And obviously we've seen the fallout of Celsius and some of the other ones like that. And I think the user capture they got was people that bought in, during the bull run, 40, 50K, didn't get out in time or saw a decline in their assets and wanted to get a yield from it. So it was a very good proposition of getting a 5% yield on Bitcoin or Litecoin or XRP, which have no smart contracting features whatsoever, instead of capitalizing a loss. So those are the CeFi platforms that I think are a good story to say. Not all CeFi is the same, but a lot of it's pretty bad. On the blended bit in the middle, where we're going for and going to exist in the future, let's say in the next kind of quarter, December, January, February, March, is I'd say more of a blend. So we are going to offer DeFi products in our platform because we still find very educated people now that they use MetaMask, they use Ledger, they use all these kind of tech, but at the same time, some of the gas fees are a bit, slow some of their progress down, or putting £100 into a DeFi protocol is not worth it because you're going to have $2-3 worth of gas fees, and that's 2-3%, which is a lot. So unless you're deploying big capital into DeFi, it can still be a bit expensive because some of the smart contracts are very heavy. So with our partnership we did with Fireblocks last year, we have a lot of ability to do staking and CeFi, etc., on our Fireblocks platform. And that means we can obviously pool certain size deposits together. So we get, say, 1,000 people put in 100 quid. We'll obviously pool that into one larger investment to save on the gas fees, and the user can get their return straight away. It's also good to point out that while one of the benefits of crypto is you can be your own bank, being your own bank isn't for everybody. Some people need a bit of a helping hand. Some people need someone to ask a question to rely on. Not everyone remembers to put their seed key in a fireproof safe, all that kind of stuff. So the kind of blur in the middle, the cloudy bit in the middle, the fog, if you want to call it, that CeFi DeFi mix of putting funds on chain, but allowing a centralized platform to handle the execution and the security and the gas fees, I think is the most scalable model to get more retail, corporate, and institutions involved. We have a lot of demand on the limited company side and on the institution side that are doing stuff with, taking USDC payments, for instance, because US dollars take forever to send. They're also taking a treasury function on this now. It's like, well, let's liquidate 80% of what we take in, but let's stake the rest of it. And now they're like, well, we could take in ETH, we could take in Bitcoin, we could take in USDC. Let's stake what we can and then just sell the other assets off. And then you got the full DeFi ecosystem, which is still you need to know what you're doing. You need to know about smart contracts.
It's a bit of a wild west still, yeah.
Yeah, there's a wild west on the protocol level and on the smart contract security level, but you have to execute those contracts with a MetaMask that's in, a browser extension, which is the most dangerous thing ever. There's so much clickjacking going on, and getting those private keys secure is very difficult because everyone is using cloud storage these days. So on the really low end side, CeFi, yeah, kind of crappy and kind of dangerous. That foggy bit in the middle, which I think will become more clear and more visible over the next kind of 1 to 2 years as they develop, I think will be the best bet. You're going to see big banks that want to take big positions in ETH and just stake it for the income because they can see it on chain, but they'll want someone to execute it and custody it for them. And then when they've kind of done that as maybe, let's call it a gateway drug, then they can go have their own team do all their kind of DeFi execution stuff and get into yield farming, DAOs, liquidity pools, Uniswap, whatever you make it. And there's more than enough out there to satisfy anyone with a medium risk appetite for yield.
Yeah, and if you like bring TradFi into the mix between CeFi and DeFi, right? It definitely feels that CeFi is closer to TradFi because it's almost like an imitation game that it's playing, trying to, obviously use the blockchain, but add the things that we already know and we are familiar with, right? To the equation.
It's familiar for them. Yeah, familiar.
Whereas DeFi is a bit more sort of on the side, and it's related to how crypto and the narrative around crypto started in the first place, right? Which was a lot of, there was a lot of adversarial narrative at the beginning, right? We don't need banks, we don't need regulatory statuses, we don't need governments. We're just gonna govern this ourselves. We're a DAO, right? So how do you see this kind of like that sort of friction between, let's say, those three, right? Adding TradFi, right, that wants to dip their toes into CeFi, potentially also DeFi. Right now, I can tell you, right now, when I see, a DeFi platform, a DAO, a DEX, right, and think about onboarding them as a business customer, instantly, I have this picture of all of my banks just running away, right? Just completely is like, okay, Adam, that's it. Regulatory arbitrage over. We're not gonna, because there's no accepted KYC standard, no accepted, fraud prevention measures. There's nothing there.
I do think it depends because not all DEXs are the same and not all DAOs are the same either. So some of the DAO ones, yeah, when there's the management structure is elected from within, it's exclusivity with inclusivity, and DAOs are a very, very special thing. I think those grassroots projects that start out. The beauty of it is they can coexist because TradFi can still access that liquidity on the same infrastructure layer as everybody else. And I think that while there might be a bit of tribalism there or a bit of maximalism, however you want to label it, there's still the ability for them to gain huge traction for when a VC wants to come in and deploy a lot of liquidity, or a high net worth investor, or a family office, or a limited company that has £1,000 they want to go and stake on Spool or Bumper or whatever the DeFi protocol that's out there. They can all do that. But some of these other ones that are coming up as like hybrids now, like Aave, for instance. Aave have Aave Arc, which is a KYB Aave pool. Same protocol, but you're trading with counterparties, who they are now. And I think we'll start to see more and more of those. The more interest that DeFi gets, but some people have regulation restrictions attached to them. They have to know who their counterparties are. So I think we'll start seeing more of those kind of hybrid model tools in there, which is effectively, it's just code, and I think we've shown over the last 10 years, people are getting really good at code.
Yeah, true. Very true.
Not all of them. There's some pretty bad bridges out there that have lost a lot of money, but, there are still humans. We are still human, and code is done by humans. It's not all AI. But there are some DEXs that are run by humans that are really, really good businesses, and they have legal representation, and they have, proper entities. And there are people behind them. They're running in a decentralized kind of ecosystem because that's their product offering. But how they're running that business effectively from their jurisdiction is kind of the other gray area. So.
Yeah, and there's definitely a stigma right now to DEXs, DAOs overall as a governance structure, but DEXs as well in particular. And I want to see us get past sort of the fear factor, right? That comes with, okay, so I don't really want to look at this. Don't want to do my due diligence. I'm a bank, right? Like just by definition, I'm just going to pass on this. Let them go to someone else.
But on that point there, I think there is it is toxic when they're the ones making the decision. And I think discuss your point there. There's on the, let's say, the law firm or some of the property firm sides, on the institutional level we're seeing now, they're getting demand from their clients to take a USDC payment or take a Bitcoin payment or list a property in Haywards Heath Hampstead Heath for crypto. And if they don't do it, then they'll go somewhere else. So there's started to become this bit of protectionism over sticky clients. If we don't offer it, someone else will. So if there's enough client demand, if there's a big enough investor with a big enough family office that wants to put 100 million into something, their banking manager or their investment manager or their family office, whoever it is, will eventually have to sit up and listen and come up with a good way to execute.
Yeah, very true. So just to kind of wrap it up around the statement that you made, you want to make crypto great again. What does that entail? Can you please unpack this for us?
Sure. So, but crypto great again. Oh, it's sort of just meme in itself, isn't it? I think it doesn't matter how big this industry gets. There's always going to be some sort of image problem. I remember a time when I first came into crypto, and I came into these amazing communities in London, and there's a few of us that are still around that are called the London OGs, the original gangsters, and that kind of heyday of coming into an event or a network meeting or a community or whatever, and there was all this kind of bullishness in the air about what can we build next, what problem can we solve next. And I think now that's slowed down a little bit because everyone's worried about regulation and going to jail. Everyone's worried about having that one rogue user that blows up your platform or something like that, or getting involved with a couple of bad wallets that are tied to a sanction or something like that. So there's a lot of fear and protectionism around this rise of regulation that's trying to make fair markets. But if we want, to play up at that kind of level, which I think a lot of us do, we have to kind of ride it out. We have to ride out the regulation bit. We have to ride out, the banking issues, etc. But all of those things is going to just legitimize our market even more. So this is making crypto great again. We get over this next kind of bump, this next kind of wave where we've got great frameworks, great support from the top level parliament all the way down to the regulator and the bank. We actually have some great relationships with some banks here in the UK because we've stopped like 2 or 3 money laundering operations, big ones too. And they're like, yeah, just send the funds back. Like, no, you guys need to do something about this. It's your freaking job. I'm not doing it for you. So I know that there's a bigger market around the corner. I know that there's another, a next golden age for crypto and DLT. And I think everyone needs to ride it out and work with the regulators as much as they can and work with their banking partners as much as they can and work with their investors and their community to say, what do you want us to build? And I think when we get back to that next golden moment, all of the previous bear markets will seem like they weren't even there. And that's what I think it's going to be like.
Here's to that. That sounds amazing vision of the future. Thank you, Jeff. Thank you so much for being on the show. You are a crypto legend. You got that badge stamped on your forehead. It was a pleasure to have you.
You're going to send me that as an NFT.
Okay, all right. Good idea. We might follow up on it. And for those who are listening, stay tuned for more legendary tales as we bring you those most inspiring people from the crypto industry. Crypto Legends is to be continued. Thank you so much.